Wall Street is overcoming default fears and aims to finish the trading week in the green. The benefactors of a positive market sentiment are US legislators who have protected the government from defaulting on its debt, and the Fed's policymakers who dropped a hint about a pause in monetary tightening. The crucial event today is the US NONFARM payrolls. Though the labor market has sent mixed signals recently, they could benefit risky assets. The benchmark stock indexes traded higher yesterday and hit multi-month highs. The Doe Jones added 154 points, or 0.47%. The Nasdaq logged the best performance and closed 1.28% up. The S&P 500 grew by 0.99% intraday to close at 4,221 points. The major stock indexes traded in a confidence in the New York pre-market. The S&P 500 is expected to trade in the corridor between 4,200 and 4,000 points. On a Thursday, the Nasdaq and the S&P 500 jumped to the highest levels in 9 months. The catalyst for optimism over risky assets was the approval of the US debt ceiling deal. The data on the labor market was mixed, and the number of initial unemployment claims grew marginally last week, but employment in the United States private sector increased in May, much stronger than expected. All in all, this indicates a still tense labor market. ADP payroll processor reported that wage growth eased last month. The unit labor cost rebounded to 4.2% in the first quarter. Easing wage growth aroused the hope that the US Fed could hit a post-bottom in June. Nominee to the Fed's Vice Chair Philip Jefferson said on Wednesday that skidding a rate hike in June would allow the Federal Reserve to evaluate more economic data before making the decision on a further tightening. According to the Fed Watch tool, the market now foresees about a 75% chance that the Fed will put interest rates on a hold at its upcoming meeting, although there is about 50% chance of a 25 basis point rate hike at one of the next Fed meetings. The dovish outlook caused a rally in bonds. Yields on the 10-year bonds were close to a weekly loss of about 20 basis points, the biggest weekly drop since mid-March. In this context, the Nasdaq and the S&P closed at the strongest level since August 2022. The S&P owes its rally to Nvidia shares, which leapt by 5.1%. The Doe Jones growth was capped by Salesforce shares, which dropped by 4.7%. The company reported the lowest revenue growth in the last 13 years. Shares of Goldman Sachs stumbled by 2.3% after the lender announced plans for further staff cuts as the difficult economic environment hampers deal. Meta shares rose by 2.98%, helping lift the Nasdaq after the introduction of the next generation mixed reality headset. Already on a Friday, futures for indexes added about 0.5% intraday. Yesterday's sentiment was supported by signs that the Fed will skip a rate hike at its next meeting and the approval of a debt ceiling law. The US Senate has passed a bipartisan bill backed by President Joe Biden that raises the $31.4 trillion federal debt ceiling, preventing what could be the first ever default. This issue could be resolved sooner, which eliminated some of the potential risks and reassured investors. In this context, the Wall Street Fear Index hit its lowest level since November 2021 on early Friday. Markets are now focused on the US unemployment data, the most important macro report of the week, and both optimists and pessimists can find an outlet in it. The jobless rate in the United States rose. to 3.7% in May, the highest level since October 2022, surpassing the consensus of a 3.5. Despite the increase, the unemployment rate remains at historic lows, proving resilience on the labor market. Besides, the report showed that average hourly earnings of employees in the public and private sector grew less than expected in May. The figure was 0.3%, a downtick from the expected 0.4% growth. Wages rose by 0.4% in April. Wages have increased by 4.3% in the last 12 months, in line with the expectations. The U.S. economy created 339,000 jobs in May, the biggest growth in the last 4 months, and much higher than the forecast of 180,000 jobs. The number of jobs was 93,000 more than estimated. The largest job growth was recorded in professional and business services, government, healthcare and leisure and hospitality. Despite robust hiring, rising unemployment and signs of a cooling wage inflation could bolster market optimism and be an additional argument in favor of the Fed's pause at the June meeting. At the same time, the labor market is still stable and the Fed does not have many arguments in favor of completely stopping the tightening cycle. In addition, the U.S. stock indexes are already at optimistic levels, even though the issue of the national debt ceiling and the key rate has not been fully resolved. This factor can exert refraining pressure. Also, don't forget the upcoming U.S. Treasury's move to issue more bonds to replenish its empty purse, which could put pressure on the liquidity or cash available to banks. In the equities, Broadcom failed to gain intraday despite the company forecasting above market third quarter revenue on a Thursday amid massive corporate investment in a AI-related technology. At the same time, stocks of oil producers and banks were recovering. Some factors encouraged the currency market, like Wall Street. As a result, the US dollar took a nosedive. Its index tumbled to 103.5. It's likely to trade in the intraday corridor between 103.30 and 104 points. The greenback recorded the steepest weekly plunge on Friday since mid-January, and the U.S. Senate approved a bipartisan deal to address the debt ceiling and implemented budget cuts, avoiding a catastrophic default. Hence, the US dollar lost its luster as a safe haven asset. Hopes of a pause in the U.S. Central Bank's policy also boosted sentiment, as the Philadelphia Federal Reserve President Patrick Harker said the Fed should probably skip raising interest rates at its next policy meeting, and he was on the same page with Philip Jefferson. Softness in the U.S. manufacturing data also bolstered arguments in the favor of a pause. Besides, fresh labor market data today was mixed and provided food for thought for those who support a pause in a tightening and rate hikes. The dollar index embarked on a weekly decline of 0.8%, which could be the biggest weekly drop since mid-January. The Canadian dollar was behaving polar opposite to the US dollar. The loonie gained 0.23% and went down to 1.3410. The intraday corridor for the instrument is seen between 1.3370 and 1.3450. The greenback's pullback encouraged the bounce of oil prices, which supported the loonie. Oil prices regained their footing on a Friday after the deal on the U.S. debt ceiling averted a default on the top global oil consumer. Brent crude futures climbed by 2.4% to trade at $76.23 a barrel, and WTI futures appreciated by 2.6%. Now, after the situation with the debt limit is settled, Investors are anticipating the OPEC summit slated for June 4. In April, OPEC Plus announced an unexpected cut of 1.16 million barrels per day, but profits from the move have since been wiped out and prices have fallen below pre-cut levels. On the demand side, the U.S. Institutional Supply Management said its manufacturing PMI fell to 46.9 last month for the seventh straight month, indicating contraction in activity. The crypto market shared optimism over risky assets, and Bitcoin benefited from the risk-on mood. Having grown by 1%, the flagship crypto is now trading at $27,100. Popular altcoins are trading firmly higher without any exceptions. While the top coins are testing the fundamentals of the default version and the Fed's pause in the short term, the Dogecoin has come under the spotlight. Elon Musk is accused of insider trading as a part of a class action lawsuit by investors. Investors allege that Musk used Twitter messages, paid online influencers and other publicity gimmicks to profitably trade through several Dogecoin wallets he or Tesla owns. As an example, Musk sold around $124 million worth of Dogecoin in April after he replaced the blue bird logo on Twitter with a Dogecoin Shiba Inu dog logo, causing the price of a Dogecoin to jump by 30%. Investors have accused Musk of deliberately inflating the price of a Dogecoin by more than 36,000% over 2 years and then allowing it to crash. The price of the lawsuit is about $258 million. In other news, CleanSpark, a US Bitcoin mining company, recently made headlines by purchasing 12,500 new Antminer S19 XP units for around $40.5 million. The timing of this announcement coincides with the Bitcoin mining difficulty hitting an all-time high of over 50 trillion, adding to the pressure on the Bitcoin miners. Bitcoin is now trading in the corridor between $26,700 and $27,300. If one of the borders is broken, the price could retest $26,200 or grow to $27,628. $8,000. And that's all for today. We keep monitoring the financial market situation and wish you a successful trading day and profitable trading weekend. Subscribe to our channel and see you online next week.